Did you know there's a hidden warning from 1929 that almost nobody talks about? It's a pattern that predicted the biggest financial crash in history, and the chilling part is, it looks like it's happening all over again, pointing towards 2026. Stick with me because what I am about to share could change the way you see the world and your future. This isn't about fear, it's about being prepared. Let's travel back in time to the Roaring '20s. It was an era of incredible optimism. The stock market was soaring. New technologies like the radio and the automobile were changing lives. And everyone felt like the party would never end. People were borrowing money like never before to invest in stocks, convinced they had found a one-way ticket to wealth. Sound familiar? Sound familiar? But beneath this glittering surface, a few quiet observers saw something troubling. One of them was a man named Roger Babson. He wasn't your typical Wall Street guru. He was an engineer, a statistician who believed in data and patterns, not just hype. In the early 1920s, he developed something he called the Babson chart. It was a unique way of visualizing the economy, not as a straight line going up, but as a series of actions and reactions. He believed that for every period of economic boom, there must be an equal and opposite period of bust. It was a simple law of nature, like a pendulum swinging. For years, as the market climbed higher and higher, Babson's chart showed a massive area of prosperity building up, far above the normal trend line. He warned that this couldn't last. He saw that the growth was fueled by debt and speculation, not solid, sustainable value. On September 5, 1929, he gave a famous speech and said, "Sooner or later, a crash is coming, and it may be terrific." How was he treated? He was laughed at. The leading economists of the day dismissed him. They said a new era of permanent prosperity had begun. They called him a calamity howler. But just a few weeks later, on October 29, 1929, Black Tuesday happened. The market didn't just crash, it evaporated. Fortunes were wiped out in an instant, and the world plunged into the Great Depression. Roger Babson was proven right in the most devastating way possible. So what was his secret? It wasn't a crystal ball. It was his understanding of cycles. He saw the economy not as a machine that could be perfectly controlled, but as a natural system that always seeks balance. Extreme highs are inevitably followed by extreme lows to return to the average. This is the warning from 1929 that has been largely forgotten. We've become obsessed with predicting the next quarter, the next year, but we've ignored the larger, more powerful cycles at play. Now, let's fast forward to today. Look around. Does any of this feel familiar? We've just lived through one of the longest bull markets in history. We've seen the rise of new, world-changing technologies like AI and cryptocurrencies. We've seen asset prices, from stocks to real estate, inflate to levels that seem completely disconnected from reality. And just like in the 1920s, much of this has been fueled by historically low interest rates and massive amounts of debt, both corporate and personal. The parallels are striking. The same widespread belief that this time is different. The same dismissal of anyone who dares to suggest that this incredible run might not last forever. We've been living in our own version of the Roaring '20s. And just like Babson's chart showed a massive area of prosperity needing to be balanced, our modern economic charts show a similar, if not larger, imbalance. This brings us to the most important part, the 2026 prediction. This isn't my date. It comes from another group of cycle analysts who have built on the work of pioneers like Babson. One of the most compelling is the work of W.D. Gann, a legendary trader from the same era. Gann was a master of market cycles, using geometry, astrology, and ancient mathematics to forecast market movements with incredible accuracy. He believed that everything in the market moves in predictable time cycles. Modern analysts have taken these theories and applied them to today's data. They look at major 90-year cycles. Think about it, 1929 plus 90 years brings us to 2019, right before the global chaos began. They also look at intersecting shorter-term cycles of 7, 10, and 20 years. When these different cycles, long-term and short-term, all converge and point downwards at the same time, it creates the potential for a major turning point. And for many of these models, the different timelines are all converging right around 2025 to 2026. This isn't about one single event. It's about a confluence of pressures. We have geopolitical instability, shifts in global trade, unprecedented levels of government debt, and the social and political divides that often widen during times of economic stress. It's a perfect storm, very similar to the pressures that were building up in the late 1920s. The system is stretched, and the pendulum has swung to its absolute peak. According to these cycle theories, it has to swing back. So what does this mean for you? First, let me be clear, this is not a doomsday prophecy. It's a wake-up call. The Great Depression was terrible, but it also led to incredible innovation and a complete restructuring of our financial system. Periods of crisis are also periods of immense opportunity for those who are prepared. The people who got hurt the worst in 1929 were the ones who were completely over-leveraged and had all their eggs in one basket, believing the hype. The ones who survived and even thrived were those who were diversified, had low debt, and held real, tangible assets. So, how can you prepare for a potential downturn in 2026 without hiding in a bunker? First, knowledge is your greatest asset. Start learning about economic cycles. Understand that markets move in waves, not straight lines. This mindset alone will protect you from panic selling at the bottom or getting swept up in speculative manias at the top. Second, take a hard look at your personal finances. The single biggest risk factor in any downturn is debt. Whether it's credit card debt, car loans, or even a massive mortgage, high-interest debt becomes an anchor that can pull you under when times get tough. Focus on paying it down. Creating a budget and building up an emergency fund is not boring advice. It is the foundation of financial resilience. Having 6 months of living expenses saved in cash can give you the peace of mind to weather almost any storm. Third, think about diversification. This doesn't just mean owning different stocks, it means owning different types of assets. This could include real estate, precious metals like gold and silver, which historically do well in times of uncertainty, and even investing in yourself through new skills. In a rapidly changing world, your ability to adapt and provide value is your ultimate security. Don't be afraid to hold a portion of your portfolio in cash. In a market crash, cash isn't just safe, it's power. It gives you the ability to buy great assets at a massive discount when everyone else is forced to sell. The warning of 1929 wasn't just about a stock market crash. It was a lesson about human psychology, about the dangers of herd mentality, and about the unbreakable laws of economic nature. Roger Babson saw it coming because he looked at the data and ignored the noise. We are now facing a similar moment in history, with clear patterns pointing to a major shift around 2026. You have a choice. You can ignore the warning, just like people in 1929 ignored Babson and hope for the best. Or you can use this information as a powerful tool. You can use the next couple of years to build a strong financial foundation, to educate yourself, and to position yourself not just to survive, but to thrive in the new reality that follows. The future is uncertain, but your preparation doesn't have to be. Thank you for watching. If this video opened your eyes, please hit that like button and subscribe for more content that challenges the mainstream narrative. Share this with someone you care about. Let's get prepared together.